Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Set up Sunday. Let's take a look at some charts. Really not that much going on. The yen carry trade started to explode last week. I don't think it's done exploding. That's going to take some time. The carry trade math still exists. So that deep sea monster is still lurking out there to unwind eventually. BOJ has said that they're not going to raise in volatile market conditions. We've also got some geopolitical stuff popping off in Ukraine, popping off in the Middle East, election uncertainty in the US, and we're in the mid-cycle lull period for Bitcoin. Low liquidity, seasonality is poor, just not a lot of reasons, not a lot of catalysts that are positive at the moment. Looking at ETFs, which could be a catalyst down the line when we get more flows cranking here, just not seeing great numbers week over week. If anything, that speaks to what's going on with the uncertainty. It just doesn't help, and when nothing's going on and there's uncertainty and low liquidity and poor seasonality, it makes sense that we're not magically going to have some rally past all-time highs, beyond all-time highs. ETH very much the same. Still a lot of desperate ETH people just waiting for something to happen. There's nothing here. It's basically flat since launch. Cumulative flows since launch, excluding the seed funding, still in the negative there. Looking at the prices since cycle low, I mean, we are in the wheelhouse of chop. We don't usually see anything basically until the equivalent of Q4 this year, October this year. We are on day 628. Give us another 50, 60 days, and I think the next move will be very, very clear. But sitting here now, I keep saying, okay, one more weekly, right? It's like trying to fill out the Wheel of Fortune puzzle, and you just want one more letter. Just one more letter, and I'll know the answer. That's where I feel like we're at in the cycle at the moment. Seasonality for BTC Q3, generally not great, generally. And that helps Q4, because Q4 is usually the quarter. Q4 is usually the best quarter. I think this math is actually wrong, but Q4 typically very, very bullish relative to the rest of the year. ETH, the opposite. ETH actually does worse in the back half of the year compared to the front half of the year. So ETH may have to wait until 2025 to get anything outperforming in earnest here. That isn't to say ETH won't be positive. It's just, that's the math. That's the seasonality. Monthly seasonality here. August, September, worst months on record. So we are in the air pocket. We are in the do anything else. Watch the grass grow, watch the paint dry, because that's going to be more exciting than what's going on here based on seasonality. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. Kraken also has a desktop app that is in beta, so check that out. I'll review that more later on when it's open to the public. But just looking at prices here, we are in a whole lot of nothing. We are barely surviving up here at the middle of the range-ish, 58. Couldn't hold 62 or 61 or 60. And honestly, that's just par for the course here, to be expected. We are past the unlocks of Germany, of the US government, of the miners, GOX. The big unlocks are behind us, but now we're in, like I said, the seasonality period where we don't really do much of anything. So what does that mean for me? Confidence down, sizing down, leverage down, number of trades down. It just really isn't anything to do. If you don't like the pitch, you don't have to swing. And there really just isn't anything here. And you can go down the list. I don't care what it is. I don't care what it is. But if a majority of the market is telling you, you know what, there's not really anything to do here, that's probably a great sign to do nothing, do a whole lot of nothing, and just wait. Just wait for better setups, wait for whatever you like trading. I'll talk about Zcash and SUI in a second, but each day, each moment of each day, there's always going to be something you could do. Whether that makes sense for most people to actually trade is another question. But we'll take a look at those, which have been surprisingly strong in the face of what this is, right? Which is just chop. There's really nothing going on. Now we're slightly below the daily cloud. As we sit, this is bearish. You want to save your energy. Let's say you're a hibernating tortoise, okay? You want to save your energy for your journey across the ocean to the mating grounds when the trend is there, when there's a current at your back. We just don't have that here. It's just plain and simple. It is what it is. You are more likely to see that when we are above the cloud. Then that's it. It's binary. It's a yes or no question. And right now it's a no for expecting any sort of miracle bullish continuation. We don't even have a chart pattern per se here on the daily to help us out. On the weekly, we did have a green weekly. Is it a dragonfly? Is it a long-legged doji? All that stuff is less important to me. What's more important to me is whether or not we close this week's candle above the open of last week's candle. That would give you greater confidence for a potential low being in. Now, if we close this week's candle on Sunday, next Sunday, inside of the lower wick below the open or the close of last week's candle, then it just goes back to neutral murky. But you do want some sort of hold above last week's close on the candlestick. We tapped the Kijun, great. What are the next supports down? Well, the Kijun, again, that's always there. Any flat line on the cloud anywhere is always representing some sort of 50% retracement. So 44 is a level, 42 is a level. Will we go there? I don't know. But there isn't any momentum up here at the moment. We also have a death cross. All the more reason to say, hey, you know what? I might not be bearish, but it certainly isn't looking super, super bullish. What we need is what we had going into October last year. Death cross, golden cross, supported the 50 moving average. For now, the 50 is still acting as resistance. So we got a long ways. Again, give me 50, 60 days. I'll tell you with a high degree of certainty, most likely what's going on here. But this just doesn't look like anything. You know, if you want to get bearish, just like it was here, interestingly enough, this looked very bearish. You had your triple top. You had your 3 drives. We even broke down and we sort of had the ETF miracle and kept going. So it may be something like that where we just require some sort of catalyst to break us out of this chop solidation that we're in. We don't need to do anything here. We just need to know what's next. Look at the 2-year moving average multiplier, green being buy zone, red being sell zone. Historically, we don't really start doing much of anything exciting in the bull market until we're above the midpoint of this indicator. We can look at 2013, we can look at 2017, and we can look at 2021. That's where we can get out the champagne and the party hats and have a grand old time, but we're just not there yet. We're actually pretty far down below the midpoint of the 2-year moving average multiplier, which is probably up there at like 110. We still have maybe a cup and handle. I don't hate it, but we have to break the high first. We can say we're all sorts of things, bearish or bullish, but until we actually break the range, it's very hard to say with a high degree of confidence what the bias might be here. If you show anybody this chart, they might say instantly to you, hey, there's a triple top there. This could be a head and shoulders, just like they would have back here said, hey, this might be a head and shoulders. You got to watch for that. So now we get to find out. It's, you know, it's boring. It's unexciting, but that's where we're at in the cycle. Looking at power law corridor, we are also below the midpoint ish, whatever this is it called. I don't remember exactly, but a level where kind of like the SOM roll. Interestingly enough, basically the bullish point of no return. We're really not there yet. Post-halving, there has never been a fake out at that point. Pre-halving, 2019, great example. Pre-halving, even this halving, pre-halving, a little bit of a fake out. Into Q4, even into 2025, like we could be here-ish throughout Q4, maybe make a new high, maybe we don't. Maybe we have a recession, maybe we don't. Maybe we have a liquidity injection, maybe we don't. Rates are probably down in the US. Maybe that's good, maybe that's bad, right? A lot of uncertainty. And that level is at 85 today, and that's going to keep creeping up as we go along here. But that just makes the multiple eventually, when we get there, that much higher. So as painful as this is to sit through, it wasn't exactly rainbows and butterflies to sit through 2016, 2017 either. 2017 later on got very bullish into 2018, but we're not at that point in the cycle yet. This cycle, that would be another 60 days, probably Q4 and beyond at this point. Looking at global liquidity in the green, global liquidity has hit a new all-time high thanks to a decline in the DXY. Stablecoin market cap keeps rising. altcoin market cap falling, so a bit of a bullish divergence there for alts. US liquidity also still basically declining. Generally, all of these things talk to one another, but it may take a pretty significant push higher in global liquidity, aka a significant push lower in dollar strength to finally get us out of this. It may take rates down. It may take QT ending and QE restarting, or whatever they might call it, down the road. So we're just not there yet. And the key here is just to be patient and not get chopped up. Trying to long things like this on leverage, ETH very far below the cloud. Not necessarily far enough to the point where you'd say, oh man, this is way oversold. You need to see a pattern, ideally falling wedge, Adam and Eve, inverted head and shoulders. We may get an Adam and Eve this week. If we get a new lower low, then you'd be looking for inverted head and shoulders, but there's still nothing here. It's way too early to trade any of this here because clearly this is bearish and you don't need to see the 5200 cross to know, yeah, this is probably a death cross for ETH USD. Save your efforts, conserve yourself for this above the cloud. The good thing at this point, just like BTC, if we get back above the cloud for ETH, for Sol, for BTC, whatever, for me, that's the time to shoot my shot, because whether or not we actually have a bullish trend past the breakout or not, that doesn't really matter. It's just telling me, hey, now's a better time with a high degree of confidence that we may do something. This is not the time for that. This is chop garbage nonsense. Here's some alfalfa for ETH BTC. Look at the 50-week moving average. It hasn't been above the 50-week moving average since early 2023. In bear markets for ETH BTC, it holds below the 50-week moving average. We can also say, well, if it's plus or minus 25% from the 50-week moving average, maybe that is the time to take a stab. We're not even there yet. This is about 15% below the 50-week moving average. So you can draw your channels, we'll look at the cloud, we'll look at whatever. Okay, it's just not bullish. It just isn't. And you still have people saying, this is it, this is the one, this is the low. It's just not there. Okay, and if anything, you want this to be deeply, deeply discounted from where it is here to even think about taking a stab. Cloud telling you continuously, now is just not the time. Channel telling you it's not the time. Moving averages telling you it's just not the time. It'll be the time eventually. That time is not this time. Wait for this. We're not there yet. We're not there yet on ETH BTC. Sol, coming out of the bear market, was flat for 280 days. Again, conserve yourself for this. This is what you don't want to miss. You could sit in cash here. You could sit in treasuries, whatever. You could do anything you want and miss this entirely and could care less. Now, this range is pretty massive percentage-wise, but the move higher as a trend trader myself, that's why you're here. That's why I'm here. I could care less about this. Plus or minus 25% up and down. 200 and above is really the level for Sol. It's that simple. Just like, I don't know, 20 was, 21 down here. And we're not there yet. Probably takes us into Q4 and beyond. Just needs time. Sol BTC looks a lot like Sol ETH in that it's got this ascending triangle quality to it. Previously, it looked like it wanted to break down and it just didn't, right? It found support for whatever reason. And we're back here. So we're still in the range. It's not like you're missing out on anything, just ignoring Sol relative to BTC. But you really can't ignore Sol ETH, in my opinion, because it hit new highs. Doesn't look strong here, but if ETH is weak on USD, it's weak on BTC, and it's weak against Sol, you kind of have to take the hint. You know, is now the time to sell all your ETH and do something? No, I don't think so, but that's why it's important to watch this stuff materialize as it's happening. So on ETH, real quick, as a trade, 3,000 is the level. Sol 200. And everything else, and I do mean everything else, generally looks like this against BTC, where you are losing out and you have lost out. For the past several years, this is an alt BTC index, and it looks like it's bearish. Surprise, it's been bearish for a long time, continues to push lower. Nothing's going to magically save this here. There isn't some high time frame pattern. This is fresh lows. This is going to take time to figure out if there's support here and whether or not this goes lower, but this does not look promising for altcoins relative to BTC. And by the way, neither does Total 2. Basically, it looks like ETH far below the 200-day moving average, far below the cloud. If anything, it's got this sickle sigh, parabolic puke to the downside characteristic to it, where we may see levels on Total 2 back to the breakout of October 2023, which would basically be, let's call it 585 billion, which would be a significant drop from here. It doesn't need to do that, but that's where I'd want to look to figure out buys. Now, there are charts, like I said, every day, every week, every month, every year. There's always one. There's always two. There's always a couple that start to do well. Zcash, for whatever reason, I had so many DMs and whatever from people. Okay, yes, I get it. This chart has moved up through the daily cloud. This could represent an edge to edge. Will this be strong in the face of potential weakness from everything else? I doubt it. So you kind of got to read the room a little bit. But if BTC can maintain sideways action, that's probably the best case for Zcash, which is a sentence I haven't said in quite some time. But you'll notice leading into this, it was basically sideways for a year before finally you make a higher high. Maybe this is some sort of megaphone thing or whatever. Yeah, it has a chance. It's post BTC halving. Maybe we get a rally. Your targets on this would be another double from here, 80, 85, 110. If I'm generous, it just depends where it hit this, where it hits the cloud. If anything, this level, this was a massive head and shoulders before it broke down. This level here at probably around 100, the psychological level, would be where most people are taking profit. Why this is moving, I have no idea. It's also SUI, similar. It's already up over 50%, I think, from the bottom of the wick into the daily cloud. A lot of chatter from a lot of interesting people about this one. It's got a lot of unlocks coming. And just as a reminder, again, the cloud is not going to lie to you and say that there isn't a trend when there is, or there isn't something to do when there isn't. When it's above the cloud later on, that's going to be the best time to take this trade, in my opinion, from a risk reward perspective. But this is setting up very nicely. It would not surprise me if from now to Q4 you get some sort of better entry, just like you did in November 2023, where you get a key June bounce there and then the breakout. And the volatility on this is enormous. A few charts on legacy. Unfortunately, the election nears ever closer, so we have to talk about this every week a little bit more and more, but Harris is now leading Trump handedly on Polymarket, and you got to think most people on Polymarket are probably crypto people, probably a little bit right-leaning. You know, I doubt this is just people trying to bid up Harris, right? Just from my opinion. So one of the more honest potential polls out there, and that certainly won't help alts, at least from market's perception, if we don't get a Trump White House. What actually materializes in a Harris White House, who knows? But I can't imagine it's as bullish for alts as a DJT White House would be. DXY still looks bearish based on where it sits relative to the cloud. This is what we want for crypto. We want a bearish dollar. Another reason why DJT would be more bullish for BTC and alts. Outside of just the regulatory stuff, he wants to weaken the dollar. Both sides want to print money. Both sides want to spend. So in the end, it's not really probably going to matter who's who in the White House. But for this week on DXY, we do have a CPI print on Wednesday. So I would watch the reaction to DXY Wednesday morning. I don't think CPI is going to come in hot this week. If anything, it's probably going to come in about where it was last month. And the more important events are going to be August 23rd when Jay Powell is speaking at Jackson Hole. Oil is up a little bit, still chopping, low time frame here. I always check oil for the geopolitical effect. If whatever's happening everywhere in the world is perceived to matter from a economic perspective, I would expect an impact on oil. Oil is fighting this recession narrative. It's fighting the global slowdown. That would push oil lower, less demand. If supply is threatened for whatever reason, if demand, but with a threat of World War III increases for whatever reason, then you'd expect oil to move higher. So it looks like oil is mildly concerned with what's going on in Europe and the Middle East by moving higher over the past couple days. The higher oil goes, the higher inflation potentially would go, and the lower risk markets would potentially go. Everything is correlated-ish, right? So having some read on what's going on can be relevant. We definitely don't want oil going above 80 if you're deep into the risk side of the equation right now. S&P futures, much like crypto, there is not a trend here. It is reset. It has mean reverted. It is neutral. The best times to be long this chart have been clean and obvious. Price above the cloud, bullish TK cross. Price above the cloud, bullish TK recross. What do we have here? Price in the cloud, bearish TK cross. I rest my case. Now is just not the time. Much like 2023, going into Q4, we will probably know where we are headed one way or the other. But here is not, there's no risk reward here because there's no expectation of anything. It's just neutral chop. NASDAQ futures also on the bearish side of the cloud, much like using any index. Most of the NASDAQ components, most of the S&P components probably look similar. So as a gauge for what to do, this is a pretty good gauge. It's a pretty good sentiment gauge. Could we have bottomed? Absolutely. This isn't saying we have to go lower. It's just saying there's nothing to do here. There's just nothing to do. It's better to wait to see if we have trend continuation on the bullish side or not. Lastly, the best chart out there, and I've looked, is still TLT. And that may be a warning bell for the risk side of the equation. Again, because if TLT represents risk off, this is the ETF long bond iShares. If this represents the most bullish chart out there, just because it's been bearish for a long time, it's flattened out, the cloud is starting to turn over bullish, then that may suggest we're headed for some bumpy ride here on risk. I'm fully aware that the issuance part of this makes it problematic for TLT to actually be long-term bullish. Purely from a technical perspective, the way this is set up, the amount of time this has spent grinding lower, grinding lower, grinding lower. I would be bullish on any chart that looks like this right now. Alt, legacy, commodity, anything. There just isn't anything else that looks like this. Maybe things like PayPal or Pfizer to some degree, but there's very few charts that look like this right now. And there's certainly a lot of eyeballs on TLT. There's a lot of money rotating into TLT to the tune of billions because of the expectation of a recession. So I would conserve your ammo for bullishness, continue touching grass or water, and just be patient here. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.